Sir Elton John would be quite proud of Sir Peter Beck this week, as Rocket Lab has been burning out their fuse on both ends, making some big moves. Between signing Neutron's first dedicated launch customer, standing up a German entity, and revealing their Ghost platform, they've had a busy week.
Talk to me, Goose! With some major upgrades in the comms segment, that won't be a problem moving forward. Atmos and Astrolight have teamed up to provide laser link communications to satellites re-entering the atmosphere, unlocking support and communications with a huge swath of new mission types.
D-Orbit as a service is here. With contracts awarded to D-Orbit, Catalyst, and Firefly, the U.S. Space Force has sanctioned private sailors to act on behalf of their governments in removing or altering other vessels, which themselves may or may not be acting on the behalf of competing or adversarial governments. All hands!
Welcome to this week's episode of Space Times Podcast. As always, I'm Harrison Lambert,
here with Paul Mayer.
Excited to share this week's space industry updates with you. We hope you enjoy the episode. Subscribe to our newsletter if you want the written breakdown of our episodes emailed to your inbox every Monday morning. Drop us a comment on our LinkedIn or Blue Sky with anything you enjoyed or would like to see. And as always, listen weekly on Spotify, Apple Podcasts, YouTube, Substack, or wherever you're receiving this signal.
This week, we have the pleasure of speaking with Justice Killian, partner at Space Capital. We're going to cut to an excerpt from that interview before returning to our regularly scheduled programming of launch, communications, and defense.
On this very special episode of the Space Times Podcast, we have the great pleasure of talking to Justice Killian, partner at Space Capital. Justice, thank you so much for joining us today.
Hey guys, excited to be here. There's a lot happening in space, a lot to talk about, and so thrilled to sit down with the both of you guys to unpack it.
Great. Well, to start things off, for those unfamiliar, which I can't assume anybody in the industry is, could you give a little bit of a background of what Space Capital is, as a VC fund, what you target, and just kind of a general overview?
Yeah, sure. So Space Capital, we are a high conviction early investor, in companies building for space or enabled by space. That we've been around since 2012. Often to make money as an investor, you have to be early in an opportunity and you have to be right. And we've been fortunate enough to have had some of those opportunities now, over a decade in to materialize. So, we've been investors in SpaceX, Rocket Lab, Planet. I think in total there's been around 11 IPOs and probably around 5 or 6, acquisitions. We're thrilled to continue to invest in a number of leading names in the industry, including Impulse Space and Muon and so on. So, what we like to do and how we like to invest is very early. We think we have a unique set of information and asymmetric advantage really early on. And so pre-seed, seed, the earliest days, that's when we like to get involved with founders. We like to leverage and bring our network and experience to the table, hopefully open doors on the customer side, supplier side, lessons learned from, a decade of scar tissue that, hopefully will help avoid some common pitfalls or traps and then build from there. So that's sort of the high level overview. Happy to go deeper anywhere that might be relevant.
Yeah, I mean, I'd love to kind of dig into the sort of thesis across all the funds you have. It seems like you're very targeted towards some of the core sectors of the market, like geospatial communications, although you have a smattering of other sectors in there, like launch, some lunar, some in-space logistics. Can you kind of break down how you go about selecting certain sectors? Is it kind of distributed by fund? What kind of prompts you to go outside of those main branches to pick up certain companies?
Yeah, so the simplest way to distill our thesis is space is becoming increasingly important for humanity and all of our industries. We've been going to space for over 50 years. It used to be for scientific endeavors, military endeavors. Now, increasingly, it is critical infrastructure that helps us understand weather. It helps time our markets. It helps us navigate our physical world, helps us understand how to grow food. And we think that trend is just at the earliest days. We think that space will start become increasingly important, both on Earth as intelligence systems, connectivity systems, but also start to devour parts of our terrestrial industries, potentially some of the more heavily polluting industries or, industrially complex industries. A good example of this more recently is the idea of AI data centers, insatiable hunger for compute, the need to shift that capability sort of off planet to avoid some of the not in my backyard behavior or the pollutive results or the water and power consumption. So that's a good example. I mean, I think communications is another good example. Humanity has an insatiable hunger for connectivity. 2G, 3G, 4G, 6G. Now moving to space. As much bandwidth as we're able to provide, we'll utilize, and so using space to fill in those gaps and deliver high throughput connectivity anywhere, everywhere, all the time, persistent. Space is eating a good chunk of the telco market and the ISP market. And so I think those are two really good examples. To your question on like launch and all these different markets and how it all fits together, our thinking is really derived from the evolution of GPS, which followed sort of the curve I just talked about, which was a tool that was developed for military, purposes for precision-guided warfare back in the late 70s. Through some commercial partnerships with companies like Trimble, Garmin, Magellan, TomTom, you started to get an opening up and a utilization of the GPS signal beyond just, guidance systems into navigation and coordination. And, then in the early 2000s, Qualcomm introduced the GPS-1 chip and it started to embed in smartphones. And now you had a software-based, interface that will allow you to connect to these signals in a very simple way. And, we started to see the rise of like location-based services and really just the ubiquity of that service all the way down to a consumer level. And so that playbook, we believe, is sort of playing out in the other more established industries, which, is communications, which I talked about being a little bit more ubiquitous, and geospatial intelligence being embedded more native. And so that's where when you look at our portfolio, you'll see that sort of thinking and mindset play out. We'll invest at the sensors and the hardware level, which is what people traditionally think of as space. But we'll also invest in the processing, the algorithms, the RF signals that are connecting things, all the way down to the end users. So agriculture companies, defense companies, logistics companies. And we've seen significant value accrue at sort of multiple layers of the tech stack. And we want, as an investor, we want to place bets where we think value can accrue over time. And so this diversified approach has actually played out really well in building portfolios.
Where would you say that space is sort of currently on that? I mean, do you think that's a fair assessment that we're still vertically integrating a little bit?
Yeah, it's a really fun question. And I think it's a really timely question, particularly on the launch side, where launch had been it's not a great business. You sort of cap out at a couple $2 billion a year, either due to like market dynamics or the operational side, the ability to like scale operations. But there's a pretty hard cap, with the SpaceX IPO, you started to see that, roughly, I can't remember the exact figure, but like 4 or 5 billion is like attributed to launch, right? And, they're the most scaled operator out there. And so, you've seen a number of acquisitions coming. Rocket Lab is a great example. After their IPO, they were slowly sort of acquiring different component manufacturers, reaction wheels and solar panels, critical subsystems that were, a barrier for their customers to launch satellites. And then pretty quickly they said, okay, well, now we can bundle this together and we can, provide you a bus and the systems in addition to the launch services. And then, as a portion of their revenue, their services, their satellite services and the bill, like, is now a much larger portion of the company's revenue. So they've recently, taken another step in this direction, with this upcoming acquisition, and wanting to go head to head with SpaceX, on the sort of direct to device or connectivity play, gaining spectrum and sort of moving in that direction.
I'd be curious as to sort of your thoughts as to how long you think that's going to stick around. I mean, do we think this is a new normal that, like, hey, the appetite for hardware, it traditionally had been sort of squeezed out by these lower capex, theoretically higher margin, more readily available SaaS opportunities?
Well, I think, whenever you're at a transitionary phase, the tendency, the emotional, the animalistic nature of, investors tends to overcorrect. And so, there's been a huge sell-off in SaaS in the public markets, almost to a belief that, like, these companies have no value anymore. I don't believe that. Like, there's tremendous value. Maybe the pricing model isn't right. They'll figure out AI. They have distribution, they have brand, they have, capability. So,
Sure.
SaaS isn't going to zero. Hardware is important in a handful, like in a number of situations. And, the investors that have shifted from SaaS to hardware very quickly without a lot of experience are going to feel some hard realities when they look at how revenue ramps and the funding requirements. There's essentially, an inverted relationship between how you finance software versus how you finance, hardware. So, hardware is a lot of capital required up front, and you wait for some of these big contracts to materialize. But by like Series B, Series C, you actually get to a point where the contracts become large enough that, now you can start to leverage debt, and you don't need, the same sort of infinite funding rounds to, go pursue and subsidize, user acquisition and try to, dominate the market. But, historically, SaaS and these platforms have been the opposite, like almost nothing to get started to prove product market fit, but then like almost infinite amounts of capital to then go and like eat market share and try to build a winner take all mentality. And so hardware is great. Like, if you build a really defensible moat, you can end up owning a pretty large and durable chunk of the market, have very sticky contracts, and build a really nice business. And a number of those, markets have not been reinvented for decades. Power and power distribution, launch, satellite manufacturing, critical components, building and scaling of drones. Like, there's a long list here. And founders are taking that sort of SpaceX algorithm, that SpaceX playbook, and saying, we can build hardware faster and more iterative, similar to the way we built software. And we're going to go do that and tighten the cycles on innovation and drive forward performance much faster than we were able to. So to answer your question directly, I think that we're probably overfunded on the hardware side right now, relative to, like, government isn't great at picking, a single winner. They need to sort of spread the money out. And right. So, you have a lot of investors that are sort of, hoping that, they'll be anointed the next Anduril. But, that probably won't be the reality. There'll be they'll prefer to spread the money out, have multiple providers, and, future growth will be dependent on their ability to also access and deliver to commercial markets. So, that's what you're going to need to see staying power. And when that hard reality hits, I think a lot of those new investors will then go back to the software side because it's more of what they know. But that's okay. Venture is very cyclical, and it sort of ebbs and flows based on like these animal spirits. And it really is like intuition, over like really strong fundamentals. And that drives, cycles and shifts. And so, raise money and build while the money's easy. And if you can build the bookings and the backlog to substantiate the lofty valuations, then you'll continue on, right?
Sure.
When that capital starts to pull back, like that's, and you didn't build a durable business, that's when it'll be a little bit tougher.
And anything at all that you want to say before we close out?
Sure. Yeah. If you're not familiar with Space Capital, please check us out. We put out a ton of content. We have a ton of resources, to help founders and help talent in this ecosystem be successful, to, build great companies, build their career. Even if we didn't invest, our success, we want to see you successful. We want to see this area and category become, more vibrant, have more winners. And so we produce tools to help that. And if you are a founder and looking to sort of unpack some of the insights around what success looks like, particularly around like talent and capital and leadership, I'm on a weekly podcast with some friends at Ad Astra and had built, former SpaceXers, and we talk about, the intersection of space, and talent and capital and leadership. It's called VHTB. You can check it out on any of your sort of YouTube or any of your podcast threads.
Awesome. Well, Justice, thank you again so much. We were super happy to have you on here. We look forward to keeping in touch and chatting again.
Thank you so much, Justice.
Awesome, guys. Thank you.
This week, our topics include launch, communications, and defense. To start things off with launch, we have a triple header coming from Rocket Lab. 3 huge announcements, starting off with their announcement that Kepler has selected Rocket Lab's Neutron for their first dedicated launch. So Neutron is the long-beleaguered launch vehicle follow-up to Electron and HASTE. This is the larger, fully reusable launch vehicle that's been kind of stuck in testing, but planned to launch later this year, although that date has been slipping for a little while. So it's very interesting to see a company, even such a successful one as Kepler, having selected this launch vehicle prior to it ever flying. This is a huge endorsement for Rocket Lab. I don't think they really need it. They've had a long track record of success, even if it's not with this particular launch vehicle. They have 100% launch success with Electron. So hopefully them taking their time carries that track record over to their new launch vehicle. To this point, they've launched a couple of their satellites earlier this year. I believe it was 4 on a Falcon 9 rideshare back in January. Carried a few interesting payloads and has been performing well, including a laser intersatellite data link, as well as a ground-to-space laser link that hasn't been announced as fully operational, but they've done some tests to show that they're able to do it. Is able to perform transfers up to 100 gigabits per second, which is much higher than we see with most RF communication links, although we have seen higher with things like Starlink for some capabilities, but that's a impressive data rate to have. Being able to use Neutron to launch whole constellations, though, should help them roll out a lot faster than counting on something like a Falcon 9 rideshare, which, as we've known for a while, has been kind of pulled back and is causing a lot of problems with the industry in terms of getting access to space. And so we've been seeing some of these deals pop up more recently. I think we saw ISAR signing some deals with Planet recently to launch Pelicans on ISAR's rocket that hasn't become operational yet either. So it's an interesting trend to see that launch vehicles, even when they're not fully commissioned, are already getting contracts from satellite providers. I think it really emphasizes the pain that a lot of the space companies are feeling in trying to get their satellites to orbit, especially when they can't afford to buy an entire Falcon 9 rocket.
The broader picture here for launch itself is that what this says to me is that there is a massive amount of, I'll say, self-awareness in the space ecosystem that they want to avoid a single point of failure in the launch segment, which is why you're seeing Planet partner with ISAR. It's why you're seeing the Neutron closing deals before it's successfully launched or commissioned. But folks want to avoid a monopoly in the launch market. And currently, the way that things are sort of going is that SpaceX is rapidly growing its share of the launch market, which it already sort of dominated. So one of the other sort of takeaways from this is that the market more broadly is sort of hedging against Starship, just in case there's a continued delay, or in case Starship winds up being dominated by SpaceX's own demands, and so getting seats on Starship wind up being really hard to do. But given that some of the rideshare programs like Bandwagon and Transporter are being decommissioned, given that the Falcon 9 is being effectively sort of decommissioned as well in a various capacity, given that SpaceX is sort of burning the boats a little bit, or burning the ships. I think some of this is more sort of macro, the goal of avoiding sort of a monopolistic player in the market, and some of this is just a potential hedge against, in case Starship gets delayed by another year or 2 years. Nobody wants to be stuck sort of twiddling their thumbs for that time, or stuck holding their breath.
I'd be expecting to see some similar contracts showing up for companies like Skyroot and InnoSpace, seeing as how they're two of the launch companies that are closest to operationalization. They've actually had successful launches of their rockets. So I think this is a good sign for a lot of these up and coming companies that are close to having launch vehicles ready for, launch cadence or operational cadence. In other news for Rocket Lab, they have now established a German presence with Rocket Lab Germany. So kind of interesting, coming off the back of that last announcement that Planet has kind of partnered with ISAR. Rocket Lab is now kind of going into the German market as well. This is an interesting kind of inversion from the pattern we've seen with a lot of European companies trying to enter the American market. And we've seen a lot of international companies re-domicile to the U.S. as of recent. A lot of that being driven by U.S. government spending and companies wanting to capture a lot of that. But we're starting to see an increase in companies trying to get a foothold in Europe. I think for very similar reasons. We've talked week after week about the IRIS² spending coming from multiple countries, millions and millions of dollars going towards these contracts, as well as defense spending it's been huge over there as well. It's kind of dwarfed by the size of the US spending, but it's not insignificant. It's also billions of dollars. So we're starting to see an increase in companies, particularly larger companies like Planet, like Rocket Lab, moving over to the German kind of area, which is where a lot of the spending is sort of focused, as well as areas like France, where we've seen some other consortiums play out. I would expect this trend to continue, especially as we see a lot of smaller countries like Poland and Spain and Bulgaria increasing their investments and spending in the market. This is an interesting kind of play for Rocket Lab, seeing as how they recently acquired Mynaric, which had a whole kerfuffle for a year about it being a German company and them not wanting to give up their sovereignty. It's interesting in that, it kind of gives them launch sovereignty, but not quite. Like, they've already got ISAR, they've already got RFA working on it, but Electron's already operational, and this could give them some launch capability. And seeing as how Rocket Lab is a New Zealand company, they're technically headquartered in the US, or dual headquartered, it's probably a little less of a hard pill for them to swallow, relying on them as a launch provider. I think a lot of this isn't necessarily just having Electron, although with our next announcement, that does seem like it's probably a component here. The other aspect is that, they're a satellite manufacturer. There's a lot of satellite production going on. They can certainly have a role to play in that. It could be that they, use Mynaric to help them build out some comms satellites that they can play into IRIS² in some way, or all these other comms constellations that are going up for Europe. So definitely a good kind of synergistic relationship here. But it'll be interesting to see with how much Europe has been pushing back against relying on the US, how much of a foothold Rocket Lab could really get here. We've seen other companies like MDA out of Canada perform this, but they're a Canadian company, and the relationship between Canada and EU has been much more amicable as of recent than between the EU and the US. So I think, Rocket Lab might have a better chance than some other American company just because they're kind of New Zealand origin. But I don't think it's going to be as big of a boon to them as their US presence.
I would agree with that. I mean, Europe is in aggregate, sort of the second largest market next to the US. So it would certainly make sense that Rocket Lab would want to be expanding into Europe more directly. I'm super curious as to how much of this was effectively sort of part of the negotiation, or part of the agreement that allowed Rocket Lab to actually acquire Mynaric. That acquisition got sort of held up for, I think, closer to 18 months, but it got held up for over a year in the courts. And so I'd be super curious to see effectively okay, if we stand up Rocket Lab Germany, we were already planning on entering the EU market. We were already planning on standing up an entity here. Does that help grease the wheels a little bit? Does that help things go through, or were those completely unrelated efforts? It seems like it'd be foolish to not assume that there's some connection there, but I'm interested to see sort of how much of that strategy was part of the actual acquisition itself. But to your point, Rocket Lab is still primarily headquartered here in the US. So the fact that they do have a European branch, it's not entirely clear how much of a premium or how much that sort of checks the box for European or German sovereignty amongst the decision makers there. Whether that's sort of like this counts for 60% or 40%, whatever the conversion ratio is, but whether this would effectively count for the same thing as a completely sovereign, stood up, homegrown entity, or whether the fact that they are effectively headquartered elsewhere and this is a subsidiary of an international company, whether that plays into things at all.
Yeah, also playing into this kind of expansion is their announcement this week of their Ghost deployable launch system. So this is an expansion upon their existing rockets, Electron and HASTE, Electron being their orbital rocket, orbital small launch vehicle, as well as HASTE, which is the suborbital variant of Electron. This allows them to launch from anywhere, which is a kind of a trend we've been seeing. We've been seeing more of an expansion of launch vehicles to other areas. Like we saw ISAR signing a deal with Maritime Launch Services out of Canada. We saw Latitude signing with the Etlock Space Launch out of Oman. We saw, I believe it was Mira, so PLD Space, signing to launch out of Brazil. So there's a expansion of launch vehicle trade between countries, and I think that's one of the aspects here, is that Ghost allows Electron to launch from anywhere. So you could potentially launch it from outside of the US or New Zealand, which are where all their current launch sites are for Rocket Lab. I think that's hugely valuable, especially given Electron's track record, the demand for more space access.
Yep.
I think a lot of we've seen bottlenecks with launch capability, although they launch out of Wallops, and there was also an announcement this week about Wallops expanding their launch cadence. So I think there's a number of factors here leading towards Rocket Lab trying to increase the launch capability they can provide with their existing launch vehicle. This is even outside of their upcoming Neutron rocket. The other aspect here, I think, is that they recently launched for the Victus Haze mission, which is a rapid turnaround mission. And that went off successfully. And off the back of that, they got a contract from the United States Space Force to launch 10 more HASTE vehicles out of the Pacific spaceport up in Alaska. And they're announcing that this Ghost platform has a couple of launch sites up at that same spaceport. So I think all this kind of plays together to show that Rocket Lab has been great at responsive space applications, so quick launch turnaround. It really feels like they're building off of the experience they had performing the Victus Haze mission to build out a product that actually fills a couple of needs, one being responsive space, which is useful for things like defense applications where you want a quick turnaround launch of a spacecraft, as well as being able to sell that as a product for mobile space platforms, which we haven't really seen. Every launch vehicle has to go off of a platform, with maybe the exception of China, where they have the Yellow Sea that allows them to launch from anywhere in the ocean. Not anywhere. Anywhere a boat can stay upright. But this sort of space mobility has been pursued for a while, but this is one of the biggest announcements I've seen that move us closer to that.
The bigger trend you mentioned of a lot of launch providers partnering with different launch sites is all about fundamentally solving the logistics challenge. There's just so much demand for upmass that there's not enough there's not enough launch sites to service that need. So folks are taking existing launch vehicles and going to existing launch sites and creating partnerships there. This represents effectively Rocket Lab's Ghost platform represents a launch site and launch vehicle in a box. You can slap that down basically anywhere, and because of their unique design here, both the Electron and HASTE, which are basically the same vehicle, they use the exact same ground infrastructure. They use the exact same hardware there. So you're effectively able to take a shipping container, send it anywhere in the world that you want to create a launch site at, and you'll be able to unpack, deploy, and set up a launch platform that is specifically customized for the Electron and HASTE vehicles wherever you need. So it's very much a logistics play. It's very much the promise of being able to rapidly create a launch site anywhere. And because those vehicles are interchangeable for this, you'd be able to launch both suborbital and orbital assets in a very rapid turnaround here. So it's a really interesting highlight of the sheer sort of bottleneck that we're seeing from launch. And the play here is effectively an operations or a logistics play. I'm a big fan of it. I think it's awesome.
Yeah, I think it's been a really interesting kind of timeline to follow. In aggregate, these three announcements from Rocket Lab all within a week kind of speak to the fact that they are one of the only companies that are benefiting from SpaceX ceasing their transporter missions. I think the consensus among a lot of people in the industry I've talked to is that SpaceX artificially kept transporter costs low in order to try to kill Rocket Lab for a long time, but they always found a way to kind of survive. And now that SpaceX has shifted their focus towards just growing revenue and worrying less about competitors, I think it's finally given Rocket Lab some room to breathe. And in that kind of vacuum that SpaceX has created in ceasing this transporter missions, Rocket Lab is snatching up all of these troubles that are being caused in the industry. So, signing contracts with launch providers to launch whole constellations, having mobile platforms be able to launch from anywhere, building up their spaceport capabilities at Kodiak and Wallops, all speak to the fact that Rocket Lab is just doubling down on their launch capability at a time when their spacecraft capability is bringing a lot of money for them. I think they definitely see that there's a need for what they're able to offer with launch vehicles, seeing as how they're one of the most mature launch providers outside of SpaceX. And I think when Neutron comes online, this is only going to accelerate that trend. I think, just the fact that Electron is seeing plenty of use, particularly with defense applications, and there's already interest, already funded interest in their upcoming rocket, just is great tailwinds for Rocket Lab, who's, doesn't really need them. They're already pretty big, but they could always get bigger. And I think this is a good route for them to take to get there. The other interesting announcement this week on the back of the Ghost announcement is that Astra is planning to raise $250 million. So Astra is the rocket company. They've had much bigger troubles than Rocket Lab, although they've often considered themselves a competitor. Their stated purpose is to create a mobile launcher that could be moved and launched from anywhere, which kind of is what Ghost is intended to do. So Astra hasn't launched in a few years after their Rocket 3 failed about half of the launch attempts. And they've been heads down working on their Rocket 4 since then. I feel like at a time when they're going to raise money, Rocket Lab announcing Ghost kind of takes some of the wind out of their sails for their stated purpose of their rocket. Electron has a much longer track record than Rocket 3 or 4. And now that they're able to do effectively what Astra is stating as their unique capability, it's going to be a hard competition for Astra to win. They've been making money in the meantime. They went private back in 2024, I believe.
Yep.
They were
2024 at a deal valued at roughly 11 million. And they were valued at 2.1 billion at their peak when they SPAC'd in, I believe, 2021.
Yeah, so this fundraise of $250 million will bring their valuation down to $1 billion. I suppose it brings it back up because at $11 million per private buyout, they were not worth $2 billion. So a lot of this is on the back of the fact that they have been able to make some money off of their spacecraft program. So they bought Apollo Fusion a little while ago, and they've claimed that they've been able to sell hundreds of units of the electric propulsion subsystem, and that's brought in some money to fund their rocket development. They did raise $80 million last year, but that was almost entirely for legal fees and lawsuits surrounding their going public and taking private effort. So, I think they might be able to capitalize more on their spacecraft program, and it might be necessary that they do, given that we've seen some space companies, kind of like Spin Launch comes to mind, having to rely more on their satellite program than their rocket program in order to fund the rocket program. And in Rocket Lab is much the same way. Like a lot of their money comes from their spacecraft development. They bought Iridium. We've seen the same model play out with SpaceX, where Starlink is the moneymaker for Falcon. So I would not be surprised if Astra continues to focus heavily on their spacecraft programs centered around their electric propulsion capabilities. But they certainly seem eager to get back to launching Rocket 4. That's been in development since they stopped launches. And that seems to remain their core focus. But I think they'll have to diversify across spacecraft and rocket in order to close this $250 million in funding and continue growing.
Yeah, couldn't have put it better myself. When you mentioned how SpaceX was artificially or potentially pricing transporter and rideshare effectively the same launch class vehicle as Rocket Lab to try and hurt their growth, the way that they were able to survive and keep cash flow positive and grow revenues was through the satellite business, was through the hardware, the platforms, and the services that they were providing. I would be astounded if Astra is not focused on growing and diversifying in a similar way, given that they already have that traction and that customer demand on their propulsion systems. And so even though they've had sort of a rough go of it, and even though they've had this sort of rocky past, the value add that they are, the problem that they are trying to solve of providing mobile launch stations absolutely hits the logistics challenge that we need to see. So Rocket Lab's Ghost platform does effectively represent a substitute product. It does effectively represent a different way to solve what amounts to the same problem. And having more solutions out there is better than just having one. So wishing the team well in their fundraise and their continued growth.
For more rocket news, but not in the launch vehicle side of things, Gitai has announced their expansion into solid rocket motor production. So Gitai is a space robotics company, which makes this kind of an odd announcement. They had one part of the Golden Dome initiative back in, I think, March at this point, May timeframe, which puts them in the running for some of the space-based interceptor program, which is usually where we see a lot of these recent solid rocket motor announcements come up. There's also been talk about it when it comes to missile defense, missile production for terrestrial applications. I don't read it as that sort of purpose. Gitai is very focused on the space applications with the robotics. This reads more like it's a space-based interceptor program, which is what we've seen with things like Apex and their Project Shadow using solid rocket motors to do their space-based interceptor component. It wasn't clear when Gitai was involved in the Golden Dome what exactly they would be building, although they've since then been talking about their spacecraft equipped with robotic arms to do in-orbit servicing and defense applications. I thought it was a bit odd that they won part of this contract, as they are originally a Japanese company. They are headquartered in the US now. So they're kind of playing into that early trend of seeing companies move to the US to get defense dollars and kind of proving out that you can do it. Given that you have a unique enough offering, which Gitai does. There's very few space robotics companies out there that build robotic arms. We most recently talked about Motive Space Systems being acquired by Rocket Lab, who are also involved in some of these space defense applications. So kind of going head to head here, but I think these solid rocket motors are going to give them a unique offering compared to the few other competitors that they have. There could also be some potential interplay here with robotics manufacturing of solid rocket motors. That's typically been one of the challenges with producing this sort of component, is the consistency with which you can produce the motor itself, given that it's kind of a slow and arduous process to build it without putting in like an air bubble or something. So a couple of different advantages here for them moving into this space. I think it would give them a pretty unique offering for space defense applications to have a vehicle that could move around and interact with other satellites, as well as provide a platform to deploy interceptors against missiles.
Yeah, it's a really interesting thing here to see somebody go from robotics, from what effectively amounts to orbital technological capability, to the launch / propulsion side of things. What this brings to mind actually is AST SpaceMobile's goal of effectively buying a launch company. Now, to be clear, Gitai's solid rocket motors are not intended to service the launch segment, but what's really interesting here is that launch itself is such a bespoke and unique technical challenge that being really good at building satellites and being really good at providing on-orbit solutions and being really good at building robotics and handling all of those technical challenges, that expertise almost never translates well to being good at building rockets. And so what we're seeing here is a really interesting vertical integration effectively, where Gitai is actually solving that problem. They're going from orbital technical capability to the rocket side of the equation here. And that's really unique. Like I said, AST SpaceMobile is not looking at building that capability. They are looking at buying that capability. And there's going to be some unique challenges for them to deliver on that and be successful. And I would agree with you, Harrison, that the way this reads to me is very much a direct play in the space-based interceptors segment. Gitai has the robotics expertise to effectively do whatever they want wherever they are on orbit. They've got great robotics expertise. They've got some of the best market-leading capabilities there. And they're now developing the propulsion to, while on orbit, take them wherever they want. So this reads more as a space-based interceptor play in my mind, where they're going to be able to rapidly get high delta V to any and every different location that they need in LEO, and then be able to interact with whatever is there. Granted, the ability to get to a location and then match its trajectory to, I'll say, non-destructively engage with it, that is a much steeper technical challenge than just colliding with or intercepting an adversarial object on orbit. But I think that Gitai's expertise and vertical integration here make a lot of sense and is a really impressive technical hurdle that they're solving.
That's actually an interesting read on it. I was thinking more like the solid boosters are for the interceptors themselves, but having it as a propulsion option for their space vehicle is actually really useful. I mean, solid rockets aren't typically used in spacecraft because they're not reusable. You use them once and it's done. But, you know, it makes me think the fact that they have robotic arms means they could reload their solid rockets. So, you know, it makes for an interesting option here in that they could use the solid rockets to rapidly maneuver and then slowly move back to a refill point where they can pick up more solid rockets and replace them and be ready for the next intercept mission.
Right. They've got the dexterous capability to do sort of anything, and they're now building the positioning and the propulsion capability to move them anywhere effectively. So it opens a lot of doors.
Yeah. Speaking of opening doors, iSpace is announcing the kickoff of their Series E raise, which is a huge door for them because it will lead to hundreds of millions of dollars more funding for their Hyperbola 3 launch vehicle. So this is very surprising, impressive, whatever you want to call it, for a space company that hasn't launched a launch vehicle yet. Back in February, they raised $700 million in a Series D++ round, which was one of the biggest raises we've seen in a while. Although, granted, there are some huge raises coming out of China. It makes me think of the space compute one that happened about a month ago. That was like around $1 billion. So
that's right.
Another example of China pouring tons of money into funding rounds. Like, these aren't even government contracts. These are just like quote unquote private investments. You know, it's China. It's kind of intermingled between the two. But to be so quickly going for a Series E raise is very interesting. I think they're just they're just going for as much money as they can get. It seems like going Series D, Series D plus, Series D plus plus, Series E, and then planning to list on the STAR market in 2027. It seems like they are laser focused on raising as much money as they can, which who can blame them? I think China's got a great track record of building up launch vehicle technology. At this point, they've gotten a few rockets to orbit, and they've got a dozen to a couple dozen more that are getting close, including iSpace. So, with launch capability seeming like such an inevitability for China, I think it makes sense that they just continue raising money and just accelerating their trajectory as much as possible to just kind of blow through operational and get to that scaling stage, which to me, this reads a lot like they are confident they are going to get an operational rocket and they are already planning on doing some of their scale up, which is what we're seeing from a lot of launch companies. Like Firefly announced that this week, where they're scaling up their launch capacity even before they've successfully become operational with their alpha that's on pause, but launching soon. I think China is thinking in a similar way. Like they have started planning huge constellations of satellites. They are launching every Long March they can get their hands on. They're getting new capabilities from their quote unquote private space companies. To me, this reads a lot like iSpace is planning to become operational very soon, likely by the end of this year, and just kind of blow through that checkpoint and just start ramping up production to meet the demand of Chinese space launch.
Yeah, there's a couple of things that I think are uniquely interesting about this announcement. The first of which is that, to your point, they just raised $700 million in February. I can't remember top of mind whether that was $700 million for the entirety of the D round or whether that was $700 million in new capital in the D plus round, which came out in February. But regardless, they are already flush with cash, and they're raising another. Initial reporting indicates roughly $150 million in this sort of first batch of their Series E raise, all largely led by sort of the state banks out of China. So very little, I'll say, private or commercial capital, still a lot of state money going in. But what I think is so interesting here is that their goal is to launch the vehicle by the end of the year. And then they've stated that their intent is to list publicly on the STAR market in 2027. So there's a lot of state funding and a lot of federal funding out of China that's going into iSpace and going into specifically the launch segment. I have yet to see, this is sort of the first indication that I've seen that this is intended to be sort of commercially viable and a commercial play rather than just a government play and a defense government capabilities play here. So I think it's really interesting that they're intending to list and effectively go public in 2027 off the back of some of their deliverables and some of the raise that they've followed through on. But yeah, to your point, this is an ongoing trend of just billions upon billions of dollars flowing into the Chinese space market, and more specifically into the launch segment, as the nation is clearly prioritizing the current space race. Moving on to communications, we've got out of New Jersey, Firefly's SciTech was awarded a $94 million U.S. Space Force contract for ground radar digitization. Now, Firefly acquired SciTech back in October of 2025, and this contract of $93.7 million is a firm fixed price contract through the other transaction agreement, and it's to modernize and upgrade a lot of the ground station and ground radar infrastructure for the Space Force. So an interesting update here that, one of the things we've spoken about extensively is effectively how underinvested and undercapitalized the ground segment, ground station, and ground radar segments have been across the U.S. And we're starting to see the U.S. Space Force and the U.S. government rectify that.
Oddly enough, by comparison, this is a relatively small contract for ground software kind of orchestration. I've been seeing I would say every other week, like a $200 million contract going out to some company that's meant to either integrate ground systems or provide a new software for training or some sort of other capability. It's still sizable. And I think it adds more color to why Firefly acquired them. I think it was late last year, October 2025.
Yeah.
Which at the time, they weren't explicit about what they were doing with SciTech. They had worked with them for software capabilities, but it was kind of like doing ISR stuff or more like processing of the sensors they were using for like Blue Ghost, which is their lunar lander. And that plays in well with their acquisition of SpaceNG, which is the sensor provider. So likely that's still kind of a role that SciTech is performing, but this does expand kind of Firefly's operations to an interesting layer, which is to providing software for the US government for operations. Radar operations are growing. I have been saying like SAR is not as popular in the US as other regions, but there is still a lot of radar applications going on, especially, we talked about recently with like ground radar technology. That was more late last year. There were a lot of contracts going out for that, particularly the refresh of the long range detection system that Lockheed builds. And that's kind of on the ground radar side of things. But we've also been talking a lot recently about space-based moving target indicators, which is also largely radar-based technology. And so there's just a lot of radar being deployed across the ground in space. And as we've seen with a lot of other technologies in terms of coordinating all of those systems, there's large software systems needed, and that's what SciTech specializes in. So, I think it's a great revenue stream for Firefly, certainly paying off what they used to buy the company. But I think it also plays in well with part of the increasing relationship between Firefly and the US government. They were part of the Victus Haze mission. Most recently, the Rocket Lab launched their Puma satellite to catch up with the True Anomaly Jackal satellite that Firefly had launched off of. That Jackal satellite was launched off Transporter 9. But prior to that mission, Firefly Alpha had launched the True Anomaly satellite for part of Victus Haze. So Firefly is involved in this rapid turnaround response space capabilities. And that seems to be one of the core customers for Firefly's rocket. I think this helps benefit that in terms of missile response. We've seen it similarly with Rocket Lab, who was also involved in Victus Haze. Same announcement this week with Ghost. Having that rapid turnaround capability is valuable for not only orbital insertion of assets, but also suborbital operations. HASTE is mainly for hypersonics testing, but that's often read as like missile development and response to hypersonic weapons from adversarial entities. So, I see this contract as strengthening Firefly's role to play in rapid responsivity for space and missile interception. Having a foot in the door for radar handling gives them kind of one layer that's needed for using their rockets to either intercept missiles or to rapidly deploy assets on space in order to do space defense missions like they did with Victus Haze.
An additional acquisition that's worth talking about this week is Cesium Astro's acquiring of Jariat Technologies. Cesium Astro is a leader in advanced communications and intelligence, surveillance, and reconnaissance systems, and they've announced the acquisition of Jariat Technologies, who provides some of their key suppliers, or is one of their key suppliers, provides some key components for Cesium Astro's communication systems. So Jariat focuses on millimeter wave RF system on chip semiconductors, which are being vertically integrated and allow Cesium Astro to boast the most vertical integration in their segment. They now have the most vertically integrated ISR systems and payloads that are able to be sold to the US government. So it's a very clear ongoing sort of scope acquisition play, which has very much been the standard throughout this entire contraction cycle that we've seen in the industry. This entire cycle of companies acquiring other companies have all been about vertical integration for the most part.
Yeah, funny enough, Cesium Astro's CEO is the former CTO of Firefly. So we've got a Firefly doubleheader here. This kind of, I feel like this acquisition process makes a lot of sense for Cesium. They acquired Vidrover a few months ago for intelligence, surveillance, and reconnaissance capabilities, so more on the software side of things. And this acquisition gets them some control over the hardware side of things. And mostly they're focused on getting sovereign capability in-house. So being able to build out a communication satellite that's fully US domiciled, that's fairly unique. There's, we have communications companies like SpaceX that can do Starshield, and they build a lot of their stuff internally. But, we have lots of other communication constellations like AST Space Mobile, Amazon Leo, up till recently, like Maxar, but a lot of it comes from MDA, which is a Canadian company. And they're one of the leaders in this sort of radio communication stuff. So, a lot of the technology has long been international. A lot of chips come from Taiwan. A lot of radio technology comes from Canada. Getting it all in-house is not a trivial matter. And most communication companies haven't done that. We saw a huge, like $500 million investment from the U.S. Import-Export Bank back in like January. So it seems like a lot of the interest in their product is coming from the U.S. government. So having a fully U.S. supply chain could be critical for this, and critical for them actually getting payments, not just investments, into their constellation that was announced a few months ago. I believe it was called Element. And it's a really capable Ka/Ku band communication satellite and really software defined. So they're able to do a lot of the advanced stuff that the US government wants to do with communications. It's been interesting that they aren't scooped up in a lot of these space data networks or PWSA contracts, which are the main vehicles for US government communications constellations. Most of it seems just because they're still kind of early to that game. For a while, they've been a producer of the subsystems for communications. Their constellation spacecraft communication play is a more recent development. So, the fact that they've long been a subsystem provider, I think, is a huge boon to this acquisition strategy. I think it moves them more towards like a business line that's already matured in terms of them supplying components, and those components can be fully US domiciled, which makes them appealing to a lot of other primes that have won contracts through the US government. So they can continue making money that way and spend it on their full constellation, which would have a unique offering to the US government and help expedite the deployment of that offering.
Moving a little bit further away from home, Intuitive Machines won a $600 million contract for 3 GEO satellites. This contract has not been disclosed. There's not a lot of details other than the actual price tag that have been announced. The CEO, Steve Altemus, has declined to provide details for the order, but spoke highly about the demand that they were seeing for the GEO bus platform that they're using, which, of course, is the old Space Systems Loral 1300 bus. So Intuitive Machines, who acquired Lanteris Space Systems being the spiritual successor to Space Systems Loral via Maxar Technologies, still leveraging the same 1300 bus technology and expertise. And the demand that they're seeing from that is purportedly high, which follows in with a couple of the trends that we've seen. We've seen a lot of micro GEO. We've seen a lot of resurgence for GEO capabilities and GEO needs. Though I'm pretty interested to see traditional GEO and the old 1300 bus getting that demand. So 3 satellites at a $600 million price tag. Is fairly reasonable. It's a fairly good deal for both sides, both parties here. That's $200 million per bus. That's sort of right in line with what the price point was when back when we were working on things at Maxar and Space Systems Loral. So it's a big win and a surprisingly big purchase for traditional GEO when we've seen other players in recent months divesting of their traditional GEO assets to lean into more new GEO assets that are less massive and priced at the like $50 to $75 million per asset range. I'd be super curious to see sort of what the margin on these assets is. I'd imagine it's pretty low, somewhere in like 5 to 10%, but still a big win for Intuitive Machines and for the team as a whole. Congratulations.
Yeah, this seems conspicuously timed with the C-band reallocation that happened a couple weeks ago, where they basically requested 15 new GEO satellites from SES, Eutelsat, and Telesat. SES was the only one that talked about the number of satellites they're going to order, so 15 is kind of a rough number, but SES alone says they're going to acquire 7 new satellites and reposition and get 2 backup satellites. So, there is a denial out of Altimus when he was asked directly if this was related to SES, basically saying, we'll provide more color on that at a later time. So maybe this timing is not, just happenstance. That reallocation was one of the biggest leading indicators of a Geocom order in recent years, really. I mean, we only had 5-6 orders of large Geocom satellites last year. And so far this year, there's only been 2. So in one move, upwards of 10 satellites are having to be ordered. Eutelsat likely goes to Airbus. It's a French company. Their OneWeb is built by Airbus. A lot of EU sovereignty will likely want to keep that manufacturing there. Telesat might go to Intuitive Machines. Right now, Telesat, the low Earth orbit constellation, is being built through MDA, which used to be part of Maxar, which fragmented into Intuitive Machines. So there's some relationship there, possibly going to them. SES seems like the leading contender, as they've worked with Maxar in the past to build some of their satellites, and having to order so many means they're likely price sensitive. And Intuitive Machines has one of the best prices on their 1300 bus. So most likely 3 out of close to a dozen satellites is going to likely be from this kind of contract. So nothing confirmed yet, but a huge boon for large Geocom satellites. It's still they're stating they're one-offs, and most of their orders are still for the 300 bus, which is the smaller one, including 12 for the L3 Harris satellites that are part of the PWSA constellation. So, not really changing the direction that large Geocom market is going, but it is definitely a huge bump for that. $200 million per GEO satellite, that's pretty reasonable. And it sounds like a lot of money, but these satellites are really expensive. It's cool to see it keeping the 1300 alive, as in, they've only had a few contracts over the past years, so not their most in-demand platform. But yeah, great to see another one of these fly. I remember working on them with you. It was a lot of fun.
Yeah. I mean, it's bringing back all the good memories. Moving on to a pair of partnerships here. So Elyria and Allspace have announced their partnership to bring the Hydra Max terminals into operational deployment for U.S. government hybrid architectures. This is a continuation of an existing partnership between the two companies, where Allspace has provided previous iterations of their terminals, the Hydra terminals, to Elyria, for Elyria to then include their space-time orchestration software on the platform, providing an ultimate communication terminal paired with a fleet management and operations software stack that pair very well together. This announcement involves the next generation of Allspace's terminals, the Hydra Max terminals, and this combination of terminal and software stack creates a really robust, effectively network of networks, allowing for assets in different orbits from LEO through GEO, and including terrestrial and ground-based systems to all connect and interact with one another fairly seamlessly. So the next iteration of this platform is able to provide a roughly 1 gigahertz of aggregate bandwidth across commercial and military Ka band frequencies, And the software-defined platform is intended to support simultaneous connectivity across multiple satellite networks. So it's a continuation of an existing partnership that we've seen that has achieved a lot of success, and that success has led to this growth and has led to this continued partnership for the next generation of assets that are going up. All in all, I think it's a pretty interesting partnership between the two that we've seen be very effective. And I think the fact that they're explicitly calling out relevant U.S. government missions means that they are very much focused on mobile moving targets and AMTI communication, both for tracking targets that aren't in the network and also for communicating with assets who themselves are moving terrestrially.
Yeah, I think this is a really interesting partnership because it's deepening the connection between Illyria and AllDotSpace, and there's a interesting kind of spider web of conspiracy here with me, in that I think York Space is moving further and further towards replacing Mynaric with Illyria. I was concerned when York and Rocket Lab were competing in PWSA late last year, where York and Rocket Lab were both flying Mynaric terminals, and then Rocket Lab was trying to acquire Mynaric, and I had the feeling that York doesn't want to be tied to Rocket Lab like that since they're direct competitors. And now that Mynaric is Rocket Lab, I'm just waiting for them to replace them. Illyria's flown with York before on the BARD mission. They were using the PXT, which is like a polylingual extension payload through NASA. So Illyria's worked with York before. They've flown on York before. AllDotSpace was acquired by York earlier this year, and now Illyria is working with them. Granted, this isn't the laser communication aspect of Illyria. It is their space-time product, but this is an interesting move because now they've effectively integrated both sides of their company through some form of York. The space-time product itself is a really interesting product. I know it's well regarded in the industry. Most of the laser communication companies we've talked to have said it's a great product. It does bridge a need that's kind of developed through this adoption of laser communications, which is, PWSA is a collection of many different companies, many different laser communication terminals, all integrated into a larger communication network that leverages traditional RF and ground systems. And it's just this huge mess of communication systems, space-time, not our podcast. They stole our name. We got to sue them. Space-time is a product that makes it closer to what we've seen with like IP networks. So it just manages the connection between all these different heterogeneous nodes so that data can more easily move throughout them. This is hugely emphasized through the US government. As we've seen with the Space Data Network, they're still trying to figure this out. Spacetime offers one of the most unique offerings to solve that problem. And for a company like York Space that's so heavily involved in the PWSA, which is intertwined with SDN, and has now AllDotSpace as well as Atlas Communications, a couple of different communication providers for terrestrial communications, this enables a really unique offering for, like you said, mobile communication terminals. That's a growing market. When we talked to Kymeta, that was kind of their bread and butter. There's a huge growing demand for it from the US government. A lot of that kind of centered around Starshield, but as with all their efforts, they're trying to not get locked into one vendor. And so having multiple options for mobile communications to satellite networks is useful. Having AllDotSpace as an option that can plug in easily using Illyria Spacetime makes it a very unique offering. So I think this is a great partnership. I think it only further convinces me that York is looking seriously at Illyria as either their supplier or even a potential acquisition.
You promised us a conspiracy theory here. I see no conspiracy. This makes far too much sense.
Onto defense, we have Impulse being selected for Victus Salo Phase 3. So the Victus series of missions has been ongoing for a little while now. We've got Victus Nox and Victus Haze. Those have so far involved Firefly, True Anomaly, and Rocket Lab. And the general scope of it is responsive space capability. It's been a very interesting series to follow because it kind of kicked off before there was a broader push for space defense capability. It's been ongoing for a couple of years now. But it's only picked up speed. And that's kind of why Rocket Lab was chosen while Alpha was on pause. and the companies that are involved in it are growing. This week adds Impulse Space for the Victus Salo 2 and Victus Salo 3. And so they're going to use their Impulse Mira spacecraft, 2 of them, to deliver United States government payloads to missions in LEO. So unlike the HAZE and NOX missions, it's not really oriented with launch, although I believe they're using a Firefly rocket, intending to use a Firefly rocket, assuming Alpha's back to launch. So there is some component there, but the Impulse part of this is using their Mira spacecraft, which is a high mobility platform. They've launched it late last year, flew a couple demo missions for Zeno and Samara Space, and this looks like kind of the next mission for them. They've been moving over to the Helios platform, and that had recently gotten a contract from the NSSL for launch capabilities. Even though it's a kick stage, doesn't go off the Earth, it just moves from LEO to GEO. But it's cool to see that Mira is still getting some use here. It's smaller than the Helios. It's not really intended for large orbit transfers like LEO to GEO, but it is intended for orbital transfer maneuvers, so moving spacecraft around, usually LEO to LEO or LEO to MEO. In this case, it seems like a SSC government payload moving around from LEO to demonstrate space mobility.
Yeah, what I think is most interesting about this is that it seems to be a little bit different from some of the other Victus missions that we've seen, in that the other Victus missions have largely been about rapid response and rapid deployment of assets. And because the Mira spacecraft itself is a kick stage, this looks to be a little bit different in that it's not going to be like a 24 or 48 hour turnaround time between call and launch, like Rocket Lab demonstrated most recently with their record-breaking turnaround time and complete sort of vertical integration there. But it is an interesting trend that we've seen, given the fact that the Victus missions have predated a little bit some of the more recent push for defense capabilities in orbit. And that the Salo 1 itself is scheduled to launch in 2027. So this contract award for Salos 2 and 3 will end up following that launch in 2027. And currently there's not a scheduled date for them. An interesting contract and a good win for Impulse Space nonetheless, to see them getting that Phase 3 SBIR.
And a bit more unique of a government contract going out this week, we have the DIU, the Defense Innovation Unit, and the SDA, the Space Defense Agency, jointly awarding D-Orbit as a service to 3 companies: Catalyst Space, D-Orbit Space, and Firefly, I think also Space. An interesting spread of companies, to be sure. The combined contract value is $8.4 million, and it covers preliminary design and risk reduction work that's intended to be done by 2026. So I would expect to see some follow-on phases to this, assuming they get through design well. The only company among the 3 that has deorbited or done deorbit work or focused on it, as indicated by the name, is D-Orbit Space. It's also interesting because they're an Italian company originally, but they do have a U.S. subsidiary. So, all 3 are U.S. companies to some extent. But again, it's an interesting thing to note that international companies have been winning U.S. government contracts, which I think is what's leading a lot of international companies to redomicile here or open some subsidiary or acquire some sort of U.S. company.
That's one of the most interesting things that I can think of here, is that D-Orbit explicitly is an Italian company that has been standing up an American presence, but that they've won this. And so D-Orbit is quoting actually a contract value of closer to $25 million, though the $8.4 million aggregate value is for the initial awards. So the way that the contracts are worded is that there's probably sort of an initial award of like $2.5 to $3 million US that can itself be extended up to a total of around $25 million. And it looks like D-Orbit is citing the total potential value of the contract closer to $25 million rather than the initial sort of bird in hand award of the 2.5 million. That would in aggregate make up the 8. So that's the fact that they are a European and not one of the American companies working in this space is probably why they're citing and quoting the total potential value, whereas Catalyst and Firefly have not done so. One of the things that I think is really interesting here is that this contract is effectively a bake-off, right? So these three companies have been selected. They're going to win the initial contract here. Everybody's going to go through and do the initial preliminary design and risk reduction work. That'll be completed by the end of 2026 so that in 2027, the Pentagon can select a single company for the full on-orbit demonstration. And so that contract award for the full on-orbit demonstration, one can connect the dots and argue that it'll be for the remainder of that potential 25 million. So, another 22 million, 22.5 million or so. Or it could be in an entirely separate contract vehicle that winds up being much larger in value. What I am most surprised by is the fact that sort of friend of the show, Cal Morris, isn't included in this at all, because that's been
or
the
Starfish.
value add. Or who?
Starfish. I would have expected them as well. They have the PWSA contract to deorbit.
Right. So I'm surprised that because Catalyst, Deorbit, and Firefly, none of those are small names. Even though this is a very small contract, none of those are small names. So I don't think that I don't think it's super likely that at the end of the day it's like, oh, this contract vehicle was simply too small for Starfish or Cal Morris to really pursue. So I'm curious as to how strict the bake-off is intended to be here, and if this is intended to be sort of the flagship for the capability, the flagship contract vehicle for the capability, or whether this is more focused on sort of R&D, getting folks to try and solve some unique problems, while there's going to be sort of other avenues for bigger contract vehicles that exist that Cal Morris and Starfish Space would be in much more active consideration for. But it's interesting nonetheless, and the fact that they're calling it Deorbit as a service, I think belies the fact that it's the Space Domain Awareness and Defense Innovation Unit. This is the U.S. government. This is the U.S. government paying private companies to deorbit other companies' assets. It has privateer written all over it. It's just such a unique pattern here, and I'm super curious to see how much explicit funding this deorbit as a service winds up actually getting, and to see, because the use case that everybody talks about is the neutral or commercial use case where there's a satellite that is tumbling and non-responsive in an orbit that is problematic. So we need to get rid of it. But the obvious implication here is that you can go and you can move that satellite in pure tumble is called or referred to as a non-consenting or a non-cooperative asset. So there's very much going to be situations where potentially, oh, hey, this spy satellite isn't supposed to be there. We need you to remove a non-cooperative asset on behalf of the U.S. government, right? Like there's going to be a lot of unique use cases that wind up mimicking sort of the old privateer model from the 17th century and 16th century, with surprising fidelity.
Yeah, there's definitely a lot of interesting things to unpack here. It's like, for one, they kind of stole the name from Paladin Space. When we talked with Harrison Box, this is what he was calling their deorbit as a service offering. So, yeah, he should go sue them. He should go sue the U.S. government. To your point, I think it's interesting that it seems very positioned towards deorbiting debris, which, we've seen non-consensual deorbiting as a thing with like Starfish's win with the PWSA deorbit, as well as True Anomaly and Rocket Lab doing their whole like space ballet with Victus missions, trying to avoid capture and trying to capture a avoidant spacecraft. So this does seem like a very intentional breakout from the defense aspect of it, but the involvement of Catalyst does make it seem like it's kind of like demonstrate this with the potential to expand into more of a space defense capability. Catalyst is currently undergoing their Swift recovery mission at like the edge of VLEO, and they did that with 30 million. They raised 17 million for their Nexus mission, which is supposed to be in GEO, and now they're competing for a potentially $25 million contract for deorbiting services. I think it's a great use of their technology. I think it's also a reinforcement of how scrappy they are as a company. They are very young. It's like 3 or 4 years. They managed to build a satellite in 9 months, which is still operational on orbit, albeit at a lowered capacity. But, without even completing one mission, they've already raised money for a next mission in a completely different space domain. And now they're competing for a third mission. That's probably their most variable mission yet. It's a great application of their spacecraft, but I think it's a huge endorsement of their team to be able to get such government interest out of, such small numbers of funding and, such a rapid and nascent kind of experience that they have in terms of heritage. Deorbit's somewhat interesting. Like I said, that's what they've always intended to do. So this is great for them. I do find it interesting that they're the target satellite that pulled out of the Starfish OtterPup 2 mission. It makes me wonder if they're like trying to undermine a potential competitor for this contract. But given that's such a low number, I'm sure that's just another of my conspiracies. And then Firefly is a really odd one here, as they've never stated deorbiting debris as a purpose for their company. It does kind of align with their acquisition of Space NG. So I'm wondering if this is kind of something that got carried over from that company. When they bought it, it was theorized that it was for their Blue Ghost lander as they built the sensors needed for the lander. But, Space NG was a standalone company. They're also supplying sensors for other applications. One of them very likely had to do with RPO and by extension, space deorbiting. So it could be that Firefly is still planning to use Space NG out of their own purposes for the lander and continue leveraging their technology for additional capabilities like RPO. It could allow them to do things like Victus Nox entirely on their own, cut out True Anomaly from that capability. So like we've seen with lots of companies, launch vehicle companies, some satellite capability is necessary in order to generate revenue for their launch business. So it would be an interesting path for Firefly to take, to be focused primarily on space defense and space mobility. I think a lot of their track record has indicated that they are very interested in that as a path. I think this further reinforces the fact that that's kind of a unique approach that they want to take.
To agree with you, I think Firefly surprised me a little bit, because Firefly hasn't shown any interest in the deorbiting market segment, and also this contract is so small that like it doesn't seem like it would really be worth Firefly's time to pursue this sort of separate line. But the fact that they acquired Space NG, and that that could very well sort of be a carryover from that acquisition, that makes a lot more sense and sort of closes the loop there. But yeah, I mean, to your point, we have seen sort of deorbit capabilities demonstrated through the PWSA previously with Starfish and Calmaris both conducting different demonstrations in various capacities. But this is I think this is interesting because this is so explicitly a Pentagon contract to provide this, like it is creating this market as opposed to a technology demonstration, if that makes any sense. So I guess the what I find so interesting about this, and what's like, this is what seems so wild to me, is that rather than going and hiring a company or a crew to effectively do a job, the US government is announcing that, hey, this is now both a commercially and government viable market to go and move non-cooperating satellites on behalf of the U.S. government. It's not like like hiring one crew to do one job. This is making publicly available that we now have this capability, and this capability is coming both for defense, though in this case more explicitly commercial purposes. But it's impossible not to read this and think of the very clear defense implications of all of this.
Another contract award out of the United States Space Force is a contract for multi-vendor satellite network tests. So this was awarded to 5 companies, a total of $60 million, split evenly across Amazon Leo, Lockheed Martin, Northrop Grumman, Rocket Lab, and York Space Systems. So the first $10 million of that contract are to demonstrate ground-to-space and space-to-space data transport with SDN-B. SDN-B is the part of the Space Data Network awarded to SpaceX back in May for $2.3 billion. That was a huge shakeup for the SDN and the SDA in general. The SDN had largely been built through the PWSA contract vehicle, which was being managed by the SDA prior to its whole restructuring. And with that award to SpaceX, kind of took a huge chunk out of it for some of the other competitors. So it is good to see that they are still committed to spreading out this contract or this constellation amongst multiple vendors and not locking themselves into SpaceX. Although, with that difference in price tag, it's still much in the favor of SpaceX for building these satellites, whereas they're kind of keeping these other companies in the running just on the software side of things. So these demonstrations are to show that they can communicate between all these different nodes in the Space Data Network, whether they're manufactured by SpaceX or one of these other 5 companies, as all of the 5 companies have already deployed or are deploying satellites of their own for the PWSA, with the exception of Amazon Leo, which I think is the interesting one in the mix here. The remaining $2 million is to actually operationalize those connections. And so this will be an interesting component for the SDN as it continues to be deployed and has interesting shakeups in the awards. I think the Amazon Leo, like I said, is the interesting standout. Lockheed, Northrop, Rocket Lab, York, they've all won through the PWSA and are deploying sections of the Space Data Network in terms of satellites. Amazon Leo, as far as I know, hasn't. Like Leo for government, interestingly, as they call out there, is just a section of the constellation of Amazon Leo that can work with government operations. As far as I know, they don't have space-to-space connections. Actually, I want to take that back. The Leo communications don't have laser interspace connections. They do have RF interconnects, which is a bit odd for the SDN as it heavily leverages laser communications. Although, as we talked about with, the Illyria contract with All.Space, there is some work being done to do like RF and laser interconnect in terms of data networking. So, it's Space Data Network's not meant to be purely laser interconnect. It's a mix of RF and laser, which is why it makes more sense that Amazon Leo would be involved in this. But overall, it just seems like a way to continue funding all these companies to make sure that there's still some heterogeneity in the mix here, but not at the cost of the operationalization of a network of different nodes from different companies. For a comms company that's not doing comms, we have Astranis unveiling their Perceptor Geo platform. So Astranis is the micro-geo satellite company. They've done contracts to send up geocom satellites for sovereign capabilities. In the Asia Pacific and the Middle East, they largely compete with the large geocom providers of old, but they've increasingly been doing U.S. government missions. So they have GPS contracts, they have their point-to-point communication, secure communication platform that they've demoed, and now they have the Perceptor Geo platform. So this is a space domain awareness play from Astranis, which kind of breaks them out of the communications sector, which they've been exclusively playing in. This allows their geostationary satellites, their micro geostationary satellite, to observe space assets from a higher orbit. So it's kind of an interesting play. Most of the space domain awareness that we talk about is either terrestrial observatories or other satellites in LEO observing other satellites in LEO. we've had some exceptions to that, like Vantor flies some Worldview satellites at a higher LEO layer, and Blue Ring, which is an upcoming mission out of Blue Origin, will be putting space domain awareness payloads in a higher orbit, as well as looking at lunar observation, which we have seen contracts from the USSF with, forgetting the name of it, but SDA is kind of expanding, and this is what I see it playing off of, is that GEO offers a unique perception point to be able to observe stuff, especially as we're seeing more contested space in GEO. I keep bringing up the Shijian missions out of China. Russia also has the Luch Olymp, but it seems like China is the bigger concern here, as they've been demonstrating for the past year or two their ability to intercept assets in GEO, which have longly been believed to be out of reach. But even recently, there's been a Shijian mission that's showing a really unique GEO orbit, more elliptical and inclined, allowing it to actually move between different longitudes in the GEO orbit, which means that it can intercept at any location. This is bringing up major concerns within the US government. I see Perceptor as a response to that, being able to observe much more closely from those ranges, since GEO is very far from LEO, and a lot of these LEO SDA assets and even terrestrial assets have trouble, getting much detail out of GEO operations. So, not only does GEO give you a better viewpoint for LEO spacecraft and tracking from that perspective, but I think it's also playing a lot towards this increased need for space defense capabilities for GEO.
The fact that they are using sort of the same bus that they've already flown is pretty indicative of the fact that Astranis is looking at effectively hitting this market hard. So there's 14 players involved with the Andromeda competition out of the Space Force, $6.25 billion pool of money that they're sort of competing for to solve some of these problems. And I believe Astranis is the only one working in that space who actively already has flight heritage effectively on their platform. So they're using the same bus, they're using the same platform that's already operated, that's already been at that 35,000 kilometer altitude in GEO, and they're unveiling basically a different payload and potentially a different sort of control setup that would give them a little bit more flexibility with sort of what they'd be able to observe. But 100%, this is very much in reaction to both Russia and more notably China have demonstrated with their ability to intercept, track, and surveil assets in GEO assets on site in orbit. I agree with you that the U.S. currently sort of is lagging in this capability, or at least lagging in the publicly announced capabilities that we have for GEO to GEO observation and intercept. And this represents a pretty big step forward in that capability. The goal here from Astranis is more so in a sort of a marketing play than it is anything else. Just effectively leveraging flight heritage that they have already achieved for this new use case is in my mind an attempt to try and sort of sell and get to market as fast as possible.
So this week, the USSF awarded a $50 million other transaction authority contract to Space Kinetic. Space Kinetic builds a satellite that's really unique. It has something called the Whirlwind platform, which is their rotating arm that allows them to kinetically launch objects from their satellite. When they kind of started showing up late last year and seemed more so positioned towards the orbital interceptor kind of market, as that's certainly one of the use cases for it. And, it was pretty hot at the time. This is interesting in that it's more meant for on-orbit kind of pre-deployment of satellites, closer to what we've seen with things like Gravityx or Symphony Space. But this allows them to rapidly deploy a satellite to a new orbit using kinetics. So rather than having to stash a solid booster on board like Yitai is pursuing, or having to have some sort of hybrid architecture like a chemical electric that's has unfavorable swap that a lot of other companies like Impulse are pursuing. This takes a completely new approach. It seems like a crazy bet. 50 million, small-ish contract, but that's a lot of money, especially for such a young company that hasn't flown yet. And I think it opens the door for a really unique use case for this, and a really early sector, as pre-deployment of satellites is not really a thing we've seen before. Maybe you could argue it with things like the Space Shuttle or the X-37B, but really like mothership designs of satellites is a new concept. And I think that, as crazy as a spinning arm in space sounds, like it's not that wild. I would say it's a little less wild than spin launch. You don't have the atmosphere to worry about, so at least there's that. And we do spinning masses on spacecraft, just at much slower sizes. So it does concern me a little bit because they have huge destructive potential, which could cause debris. But seeing as how this is the focus of their company, I'm hoping that they can figure out a way to make this as safe as possible while still implementing a really unique technology that opens up the ability to move orbits very quickly.
The stated use case here is, like you said, to use the Whirlwind platform to rapidly deploy sort of microsatellites into different bespoke orbits as necessary. The controls necessary to facilitate that, I think, are really interesting just on their own. But sort of, you mentioned Gravitics, and again, Gravitics does not bill themselves as a defense company, neither does Space Kinetic, but the clear implication of deploying other assets at velocity on orbit is very defense oriented and very defense. There's some very clear defense implications there. So I'm not at all surprised to see the U.S. Space Force funding Space Kinetic healthily here. And Space Kinetic is a pretty good poster child for the overall sort of shift in U.S. Space Force and U.S. DoD acquisition that we've seen over time. They're a very small company. They're moving really rapidly, and the whole goal is to get novel capabilities into the end user's hands for government and defense purposes as rapidly as possible. So all of this makes sense, but it's another sort of public-facing commercial play that I think has much more defense applications than commercial applications. So we've seen a lot of this week. Moving on to the lightning round for the week, there are a multitude of different business moves. First and foremost, Open Cosmos Atlantic won an ESA-ERS-EO contract, potentially worth up to 25 million euro. The Portuguese entity that was formed by 50 million euro of in-country investment has already employed 50 employees to develop 4 new high-resolution Earth observation sats. And this is the first Portuguese prime for a European Space Agency contract or mission. All of this is going to start off with a 750,000 euro study that's going to kick off by the end of the year.
I mean, it's a small number, but it's a huge one for Open Cosmos. We talked with their founder, Rafael, back in March, and it was really impressive how he's able to bootstrap his company towards profitability.
Absolutely.
Contracts like this, it seems small, but when taken in the context of a company that spent so little to get there, it's a huge boon. And he talked about having manufacturing hubs all over Europe. Portugal seems to be one of growing interest here, especially as they start to build up their own space launch facility. I think it gives Open Cosmos the ability to kind of push the space industry along, because they have a really, really advanced capability in terms of being able to laser interconnect, AI onboard edge processing. They have Earth observation and communications applications on their spacecraft, and they're already flying over a dozen satellites. So they've been executing extremely well for a company that's been so scrappy. And beyond that, like their manufacturing capability, like spreading it out throughout Europe and being able to develop and build everything in house is really impressive. And he was talking about larger satellites than what they currently fly. So lots of avenue for growth here across everything: technology, company, manufacturing. It's just been a really impressive company to watch, and I think this contract reflects that.
in a surprising announcement, Blackstar Orbital has reached an agreement with Pono Capital 4, a SPAC vehicle, on Thursday to go public in the first quarter of 2027. This SPAC values the company at $380 million, and this is surprising and interesting because Blackstar, based out of Florida, has only received $1.9 million in funding to date. So they've received $1.9 million in U.S. government funding, R&D funding to build effectively Space Drone, which launches on a traditional rocket like a payload and then performs missions in low Earth orbit and returns to Earth to land on a runway. So it's got very much a space plane design that's unique and harkens back to a lot of, in a large way, the space shuttle itself. But they've received only $2 million in funding and are reporting $120 million in letters of intent and LOIs from customers ranging for different use cases. I think this is a huge accomplishment for the team, but it is a very high valuation for a company that has yet to deliver anything. So Blackstar has yet to launch anything. They've yet to deploy any hardware. They've yet to build any hardware. They have $120 million in LOIs. Most companies that are working on something interesting are able to get meaningful amounts of LOIs. I've spoken with companies that have over $500 million in LOIs, and then they go out and they conduct a seed raise, and ultimately they're able to convert on 5 to 10% of those LOIs, and it's a huge accomplishment. Point being that LOIs are not a very strong signal. LOIs, MOUs, they're not a very strong signal as far as customer demand or revenue go. So the valuation is outsized based on the traction that Blackstar Orbital has to date. But this is a huge win for the team that they're able to SPAC, they're able to fundraise, and they're able to effectively get a whole bunch of money in the door for them to go out and build. Though it does indicate that, generally speaking, a company will SPAC or raise via an SPV, but companies will pursue some of these alternatives to more traditional capital under effectively two circumstances. The first of which is when they're trying to liquidate, when they're trying to get out of the market, or when early investors are trying to find a way to get out, or when they're having a lot of difficulty fundraising via traditional methods. So given that Blackstar Orbital is so early on and that they don't have a whole lot of investors on their books, this would tend to trend towards the latter of the two, that they've been having difficulty fundraising through more traditional means, than it would be older or more senior investors on their cap table looking for a liquidation event and looking for a way to return capital to their LPs.
I feel like it kind of reinforces your point that the downmass market is being hit pretty hard with Starfall. This might be one of those examples of the market became harder to fundraise in following Starfall's kind of launch. I think it contrasts interestingly with somebody like Dawn Aerospace, who's one of the only others that are doing a space plane. Overall space planes are challenging. We've had the space shuttle, and that was notoriously expensive to operate. We have the X-37B, but that's super secret spy plane. So there is
the first rule of the X-37B is you don't talk about the X-37B.
Yeah, unless you're making a press statement, which you do all the time. So it's not unprecedented to have a space plane, but even then, it's the government funding it, so it's likely that it costs more than it's worth, and the worth of it is that we have the capability. So there's not really been a commercial player that's been able to convince the market that a space plane is a good idea. I think that's headwinds for Blackstar, probably contributing to the difficulty in raising. And Don took an interesting approach by building out other business segments that support their spaceplane development, which I think is, as we've seen with a lot of companies, a better approach when you can gain profitability off of a component or a service that lends towards the grander vision. So yeah, Blackstar being a pure play towards a spaceplane, I could see that being very difficult. We've also talked about starfighters going public through a SPAC, much for likely the same reason, as it's hard to fund that kind of approach. So yeah, I think there's just a small appetite for kind of reusable plane capabilities, as it's been something that's been shown to be very difficult in the past through Space Shuttle, through Stratolaunch, through Virgin Orbital. It's just a difficult kind of engineering problem that doesn't lend itself well to a successful commercial business, but I'm glad there's still people pursuing it. And 380 million, that's a huge jump from 2 million in government funding, and hopefully enough for them to get a flying test out of it.
Moving on, with some unfortunate news, Gravitalab has officially entered liquidation. So Gravitalab has been developing suborbital hybrid launch, a vehicle called Isaac, and they completed 2 flight tests with deployments that were planned for 2025. Unfortunately, some of the funding that they were counting on didn't come through. That's sort of the primary explanation for why they're currently liquidating. So a 25 million pound investment from BNP Finest Group on the books, but with that 25 million pounds, they only received 20,000 pounds. So liquidation of Finest is actually underway. So some of the folks who were going to be providing money to Gravitalab actually fell through, and so the money that was coming in didn't work. They were almost 24 people. They were 19 employees, 19 people strong in 2023. That number is down to 3. They're currently being liquidated by Price Bailey, and they currently owe over 700,000 pounds to unsecured creditors.
Yeah, this is interesting to see so much detail into the liquidation event here. The part that I found interesting was that it seemed like Gravitalab triggered the liquidation of Finest, given that Finest didn't follow through on their funding commitment. And I'm curious to see if they're able to get money out of Finest through liquidation to close the outstanding debt they have to their debtors, particularly their employees. 140K to their employees is probably the most painful part here. It probably means they weren't paying at the end there.
Yeah.
But yeah, overall, really unfortunate. They were a couple of test flights in, so nothing. And unlike Orbex, who is a Scottish rocket company that liquidated earlier this year, there was no mention of them selling any of their intellectual property to other companies. I think Skyrora bought up some of Orbex's intellectual property. They did say it was to be announced further, because this is all in process. I hope some of what they've done goes to other companies, but because they're so early, I can't think of any companies that would benefit from it.
Galaxy out of India has acquired StarOps. So StarOps is derived from Team Indus, which is formed in 2010, and that team is the one that won a spot in the Google Lunar X Prize for a lunar lander. The acquisition comes just about a month after Galaxy lost contact with their inaugural mission, Drishti. So this pretty clearly reads like an acquisition that is intended to sort of shore up technical capability and fill any sort of potential gaps that they may have had. So this acquisition is a little bit more unique than some of the other acquisitions that we've seen that have been sort of explicitly scope with a very few scale type acquisitions sprinkled in there. But so this I would not describe as an explicit scope acquisition. I would describe this a little bit more as sort of a capabilities or a quote unquote defense acquisition, where it's like, oh, okay, it's not like we're trying to vertically integrate. It's not like we're trying to acquire somebody else's business. We're not trying to acquire somebody else's capability set. We're trying to sort of shore up our own. So what this reads is like, okay, hey, we did a great job with the team that we had. Some stuff fell through the cracks because there's only 3 of us, and we really need like 6 of us to be able to do this. So they went out and they hired a bunch of experts. They brought on a team of experts by just acquiring the company. So this reads a little bit more like sort of an acqui-hire slash scope style acquisition, a little bit of a combination there. But an interesting acquisition, not super surprising, but I would expect this to wind up leading to some positive outcomes for Galaxy, as the team at StarOps is going to be a full sort of subsidiary of Galaxy. So they're largely going to be sort of left alone to do what they need to do what they want to do. And just sort of supplement Galaxy's own expertise. Well, that is a wrap for this week's recap of the space industry. We hope you enjoyed the episode. As always, please drop us a comment, check out our socials, and follow us on Spotify, Apple Podcasts, YouTube, Substack, or wherever you're receiving this signal. Until next time, this is Paul Mayer and Harrison Lambert signing off for now.